Welcome back to the deep dive. If you've been trying to make sense of the whole digital finance scene, especially lately, well, you're definitely not alone. It's exciting, sure, but also, frankly, pretty bewildering sometimes. Businesses, people just trying to figure out the future of payments.
Right.
We've all been watching this incredibly fast innovation, particularly with stablecoins, but without much of a roadmap.
Yeah, it's felt a bit like the Wild West, maybe. No clear rules of the road.
Exactly, like building a skyscraper with no building codes. But that might be starting to shift. Because on May 20th, 2025, the U.S. Senate took a really significant step. They advanced the Guiding and Establishing National Innovation for U.S. Stablecoins Act, bit of mouthful, the Genius Act.
Right, Genius Act. Much easier.
And it passed with a pretty strong 66-32 vote.
And that's a really crucial development. So our mission today really is to, cut through some of the noise around this. We want to show you why this isn't just another headline. It could genuinely be a game changer.
Right.
This act, it's not just about tidying things up. It looks poised to actually reshape how organizations think about and use digital payments. It might unlock some pretty big opportunities.
And the scale here is just enormous, isn't it?
It really is. We're talking about a stablecoin market that's already sitting at, what, $250 billion?
Yeah.
And the projections, they see it soaring past $1 trillion, maybe even more in the next few years. So when you look at those kinds of numbers, you really get a sense of the stakes involved here. It's huge.
Okay, let's unpack this. So maybe let's start with the why. Why was this legislation seen as so necessary? You mentioned the scale, the $250 billion market, and it's dominated, really, by USDT and USTC. Together, they're, what, $214 billion of that?
That's right. A huge chunk. And they've clearly shown their usefulness, right?
Yeah.
Faster transactions, lower costs sometimes compared to, the old ways.
Definitely. But despite that clear utility, that demand, wider adoption has felt, a bit stuck.
Hesitant. And what's fascinating here is that growth happened despite a really fundamental issue. The lack of a clear regulatory framework.
Right, that gray area.
Exactly. Imagine trying to build out a global payment system when you're constantly wondering, are we on the right side of the law here? That uncertainty, that's been the main bottleneck. It's held back so many businesses who could see the potential benefits, but just couldn't stomach the compliance risk.
It wasn't just about unclear rules. It was the fear of operating without a defined status.
Precisely.
So that brings us right to you, listening in. If you're maybe a business leader and you've been looking at stablecoins for, treasury or customer payments, but you felt stuck in that fog. What does this Genius Act moving forward actually signal for you right now?
Well, for a lot of people, it signals the beginning of the end of that fog. Finally, some potential clarity. And the Genius Act is very focused. It specifically targets payment stablecoins, not all digital assets, just these payment ones.
Okay, so what exactly is a payment stablecoin under this bill?
Good question. The bill defines them pretty precisely. Digital assets designed for payments or settlement, where the issuer has this obligation to keep the value stable relative to, say, the US dollar, a fixed monetary amount. That specific focus is really the foundation here.
And here's where it gets really interesting for businesses trying to figure this out. The bill also clearly states what payment stablecoins are not.
Right. Important distinctions.
They're explicitly not national currency. That avoids a whole tangle of other issues. And maybe most importantly for many, they're not considered securities or commodities under the Investment Company Act of 1940. Why is that 1940 Act distinction so critical?
Yeah, that's a really powerful point. The 1940 Act, it was designed for things like mutual funds, traditional investment products. It wasn't built for operational payment tools.
Right, totally different worlds.
Totally different. So by explicitly saying payment stablecoins aren't securities or commodities under that act, the Genius Act essentially pulls them out of a really dense and often unsuitable regulatory structure.
So for businesses, that means?
It means less ambiguity. It means a clear path for things like accounting treatment. And crucially, less risk of accidentally tripping over regulations designed for, investment funds. It basically clears the way for stablecoins to be treated as what they functionally are, a new kind of digital cash for getting transactions done.
Okay, that makes sense. So if they're carving out this specific category, who actually gets the green light to issue these things under the proposed rules?
The bill lays out two very specific types of issuers. First, you've got subsidiaries of existing insured depository institutions.
So basically, traditional banks getting involved through a dedicated unit.
Exactly. They can leverage their existing regulatory setup, their compliance structures, consumer protections, all that established oversight.
Okay, that's one path. What's the other?
The second path is for federal qualified non-bank payment stablecoin issuers. This is actually quite significant. It's a new category.
A non-bank issuer. Interesting.
Yeah, these wouldn't be banks, but they'd need direct approval from the Office of the Comptroller of the Currency, the OCC. So it's creating a brand new federally regulated pathway specifically for these non-bank players.
A dual track system.
Hmm.
What are the potential, pros and cons for a company thinking about which route to take? Bank subsidiary versus this new non-bank license.
It probably comes down to, well, your existing setup and maybe your risk tolerance. A bank subsidiary, they might benefit from having compliance teams and regulatory relationships already in place. Could be smoother sailing, maybe.
But they're under existing bank rules, which can be strict.
Right. The non-bank route, that's more like a fresh start, a greenfield opportunity. But you're building everything from the ground up under a completely new regulatory regime.
Which sounds like its own challenge. Maybe higher startup costs for compliance.
Potentially, yeah. But for both routes, there's one absolutely critical piece, the reserves, how they're backed.
Ah, yes, the 1.1 backing.
Exactly. The Genius Act mandates that these permitted issuers have to hold reserves backing their stablecoins on at least a one-to-one basis.
Now, that's kind of become the industry standard already, hasn't it? We see USDT and USDC publishing monthly attestations about their reserves.
It has, yes. This act essentially formalizes that expectation into law for these regulated issuers. It's not just about, looking good. It's a strategic move. It aims to embed these stablecoins within a framework that feels familiar to traditional finance, making them more acceptable, more palatable to big institutions that really prioritize security and clear oversight.
That really highlights why this act could be such a big deal. So with this clearer legal footing potentially coming, let's shift to the practical side. What does this actually mean for your business, for your bottom line, your operational choices?
Well, if we connect this to the bigger picture, for any organization that's been kind of sitting on the sidelines, unsure, this whole development is potentially a green light. It could just make it much easier to justify integrating stablecoins internally, less pushback perhaps. It drastically cuts down on that compliance uncertainty we talked about. And it gives you a more concrete roadmap if you're thinking about using stablecoins for, say, treasury management or maybe supply chain payments or even customer options.
So moving them out of the maybe someday tech lab pile.
Exactly. It's about enabling broader, more confident use, moving them into the realm of established, everyday financial operations.
Okay, so if that clarity is on the horizon, it definitely makes sense to start prepping now, even if the bill isn't law yet.
Absolutely.
We're already hearing about businesses starting to think through immediate steps. Like, number one, doing a thorough audit, looking at everything you're doing now with digital assets, stablecoin transactions, custody, accounting, internal controls, just to see where the gaps might be relative to these potential new rules.
Smart move. You need to know your starting point.
Second, planning for compliance. Starting to draft or update policies and procedures, especially thinking about that 1.1 reserve proof, the attestations.
Getting the paperwork ready.
And third, probably taking a hard look at your vendors and partners, your custodians, your payment processors. Will they meet these new requirements? You don't want disruptions later on.
That's critical. Your whole ecosystem needs to be ready. But it's also really important to remember this Genius Act, it still has a potentially lengthy journey ahead.
Right. It passed the Senate committee, but it's not law.
Not yet. It's now open for amendments on the Senate floor. That means things could change. Provisions could be added, removed, tweaked. This raises an important question. Does that long timeline just mean more waiting and uncertainty? Or is it actually an opportunity?
An opportunity for what? To get ready or even influence things?
Both, potentially. It certainly gives organizations more time to prepare internally, but proactive engagement is also possible.
So while the final details might shift, what specific things can businesses do right now during this legislative process?
Well, definitely that internal assessment we mentioned. Understand your current stablecoin use. Figure out your future needs. Review your compliance setup against what's being proposed in the bill.
Makes sense.
And look, it's probably really smart to start talking to your legal team, your tax advisors, your accountants now. Get their take on the nuances for your specific situation.
Yeah, specialist advice seems key here.
Absolutely. And just, keep an eye on things. Monitor the legislative updates. See what best practices are emerging in the industry. Stay informed.
It really highlights the fact that navigating this intersection, old school financial rules, meeting these new digital asset frameworks, it's inherently complex, isn't it?
Oh, absolutely. It's a brand new landscape, really. There's no well-trodden path here. And that complexity means you really, really need to understand exactly how these potential requirements apply to you. Are you thinking of being an issuer, a custodian, just a user making payments?
Each role has different implications.
Totally different. Getting that specific understanding is going to be crucial for staying compliant, obviously, but also for actually taking advantage of the opportunities this might create. It's about turning the legislation into a workable strategy.
So, wrapping up, it feels like the Genius Act, even in its current stage, really marks a pivotal moment for stablecoins in the U.S. It's offering potentially that foundational regulatory framework businesses have been asking for.
It really is. It's a serious attempt to bring stablecoins into the regulated financial system. And remember, you don't have to figure all this out on your own. Having advisors, people who get both the traditional finance rules and the specifics of digital assets, that kind of expertise can be invaluable in making smart decisions right now.
Definitely good advice. So here's a final thought for you to take away. As stablecoins look like they might be moving further into the regulated mainstream, how might your business strategy or even your personal financial approach need to adapt? How can you position yourself not just to be compliant, but to actually capitalize on these shifts and succeed in what looks like the next era of digital finance?